Hello, welcome to the Financial Profit. Today we have a very special show planned for you. We're going to discuss one stock, only one, but it looks like an excellent buying opportunity. So we will dedicate today's episode to examining an excellent company in the semiconductor industry, a great American chip stock, Marvell. As always, click like and please subscribe to my channel. Now, let's talk about Marvell. I recently highlighted Marvell in a profit report that I posted earlier this week. I wanted to take this opportunity to provide a more comprehensive analysis of Marvell as I recently added the stock to my all-weather portfolio. Now, the AI chip market is expected to increase exponentially in future years. Estimates suggest that we could see the AI chip market size increase to about 157 billion in 2027, to over 200 billion in 2028, and to nearly 1 trillion by 2034. Now, Marvell's primary competitor in the extremely lucrative custom accelerator AI chip segment is Broadcom, and the applicable market for custom accelerators may reach around 60 to 90 billion in several years, in 2027 or 2028 possibly. Now, Marvell could deliver about $2.6 billion in AI-related revenues this year, which would be about a 73% year-over-year increase. Now, Marvell stock recently got crushed during the early year tech and momentum stock correction, dropped by a whopping 50% peak to trough recently. I also want to highlight that this considerable decline occurred while Marvell delivered a better than anticipated sales and earnings report and guided better than the consensus estimates suggested. Now, another point to highlight here is that Marvell became extremely overbought and near-term overvalued after it posted better than expected earnings and guidance in the quarter that ended in December. However, nothing short of a considerable valuation reset could make Marvell's valuation seem attractive again. This is exactly what we got as Marvell's stock corrected significantly recently by 50%. Its forward P ratio dropped to only about 17 during the recent sell-off. Also, given that Marvell could earn about $4 next year in fiscal 2027, its forward P ratio may only be 17 right now. Now, provided Marvell's solid growth prospects, this valuation seems very cheap, making the stock extremely attractive here in my view. So let's take a look at Marvell technically. With Marvell, the downside could be limited now. Of course, after the 50% drop, there's a high probability that the downside is limited now. And the upside appears very abundant. Marvell could close the gap hitting around $85 relatively soon. However, the stock also has potential to move back up to $100 and potentially even considerably higher, especially in the intermediate and longer term. I also want to note that Marvell closed the gap all the way down to $65. This was all the way back from August 2024. Also, we have to recognize how deeply oversold Marvell became recently. The RSI dropped below 30 for the first time in years as the stock crashed on very massive volume. So we saw a precipitous decline. This appears to be, and we saw just panic and indiscriminate selling. This appears to be a considerable overreaction. So we basically witnessed an overreaction to the downside, much like the overreactions that we've seen in the upside in the recent irrational moves higher to ludicrously high valuations in some cases. Now, down the line, I believe Marvell could grow into a higher valuation, but it must make it back up to $85 and then to $100. Now, just note this, that a move to $85 would be about a 20% increase from the current price, and a move to 100 would be about a 40% increase from where the stock is trading around today, which is roughly $70. Now, I want to discuss the recent earnings. It's hard to believe that Marvell was already down by about 33% prior to reporting earnings, yet despite reporting better than expected top and bottom line numbers and guiding higher, the stock got smacked down by another 25% drop after breaking down below $85 post-earnings. In total, Marvell declined by 50% during the recent correction, despite reporting sales of $1.82 billion last quarter, which was a $20 million beat. And also, this represented a very solid 27.3% year-over-year sales increase. Now, the company also surpassed EPS estimates by 1 cent, delivering 60 cents instead of the projected 59-cent estimate. Marvell guided slightly above the consensus estimate, which is positive. Marvell said its Q1 sales would be about 1.875 billion, 5 million above the consensus estimate. Also, Marvell said that its EPS would be about 61 cents, which was also 1 cent above the consensus estimate. Now, despite the negative overreaction to the report, I don't see anything overly negative here. We should also consider that the company may be being conservative due to the volatile and uncertain market environment. It seems likely that Marvell is sandbagging here, in my view. And the company has a very high probability of beating the estimates, even substantially, when it reports its Q1 earnings results. Now, fundamentally, Marvell appears very cheap here. Marvell has posted excellent EPS growth recently. Moreover, earnings per share growth is anticipated to surge by about 80% this year. So the consensus sales increase is for 42% this year and about 21% next year. And the consensus EPS increase estimate is for about 80% this year and roughly for a 31% increase next year. Now, next year's sales growth is anticipated to remain above 20%, and Marvell should continue generating solid double-digit sales growth in future years as well. Therefore, we could see sales reaching around $16 to $18 billion by 2030. Now, from an EPS standpoint, Marvell could earn about $4 next year and potentially increase its EPS to about $5 in fiscal 2028. This dynamic suggests that Marvell may be trading at only about 17 times next year's earnings per share estimates and only about 14 times fiscal 2028. Really, it's the year 2027 potential earnings per share results. Now, Marvell's valuation is very cheap because of its considerable sales and earnings growth, as well as future growth and profitability potential. Now, let's look at the projection table here, where Marvell could be in the future. So, due to its excellent growth prospects and solid AI advancements, Marvell could increase sales considerably in future years. Moreover, increasing AI revenues and improved efficiencies could drive earnings considerably higher as we advance. We may also see an elevated price-to-earnings ratio of 25 to 30, or even higher possibly, due to the substantial growth opportunities. Marvell has a high probability of moving up to around $125 to $175 in the next 12 to 24 months, and the stock could continue advancing in the future. Now, I think I'm being a little bit modest here in the price target projections, because in a more bullish case scenario, we could see Marvell increasing to $150 to maybe around $200 within the next 12 to 24 months. I want to thank you for watching today's profit report. I hope that you enjoyed it, and I would like to hear your comments. Please join the conversation in the comment section below. If you enjoyed my video, please click like, share, and subscribe to my channel. You can also join the Financial Profit, our investment community, which is seeking Alpha's #1 service for proven portfolio profits. Our amazing investment community keeps growing due to our consistent and very solid portfolio returns. Thank you very much for watching. I hope that you benefited from watching my video, and see you next time. Bye.